Welcome to the channel. Want to make smarter stock trading decisions? Technical analysis is a game-changing tool that helps you read the market's movements and make data-driven choices. Whether you're a beginner or experienced trader, let's dive into how you can use technical analysis to predict price trends and boost your trading success. First off, what exactly is technical analysis? It's the study of past market data, primarily price and volume, to forecast future price movements. Unlike fundamental analysis, which looks at a company's financials, technical analysis focuses solely on charts, patterns, and market sentiment. Let's start with charts. The chart is your roadmap, showing you how a stock has been performing over a period of time. Candlestick charts are the most popular. These little bars show the open, high, low, and close prices for each time period, whether that's 1 minute, 1 hour, or 1 day. Why are candlesticks so powerful? Because they reveal market sentiment in real time. Green candles mean the price is going up, while red candles show it's going down. By observing these patterns, you can spot trends before they peak or bottom out. Next, let's talk about support and resistance. These are the key levels at which a stock price tends to stop and reverse. Support is the price level where buyers usually come in and prevent the price from falling further. Resistance is the opposite, the price level where selling pressure tends to push the stock back down. Spotting these levels is essential. When a stock hits support, it might be a good time to buy. When it hits resistance, you might want to sell or wait for a breakout. If the price breaks through either level, it signals a potential shift in momentum, giving you the opportunity to jump in early. Now let's dive into moving averages, one of the most powerful indicators in technical analysis. A moving average smooths out price data to help identify trends. The most commonly used is the 50-day moving average, which shows the average price of a stock over the last 50 days. When the stock price crosses above the moving average, it's a bullish signal, meaning the stock is trending upwards. When it drops below the moving average, it's bearish, indicating potential downward movement. This simple strategy can help you determine when to enter or exit a trade. Then there's volume, which refers to the number of shares traded in a given time period. Volume confirms the strength of a price move. A price increase accompanied by high volume means the trend is strong and likely to continue. Low volume, on the other hand, can signal a lack of conviction, making the trend less reliable. All popular indicator that uses volume is the Relative Strength Index, RSI. The RSI ranges from 0 to 100 and measures whether a stock is overbought or oversold. An RSI above 70 suggests a stock may be overbought, while an RSI below 30 indicates it may be oversold. By tracking the RSI and volume, you can get a clearer picture of whether a stock is likely to reverse its trend or continue moving in the same direction. If the RSI is high but volume is low, a reversal might be coming. Another key concept is trend lines. A trend line connects two or more price points on a chart to identify the direction of the stock. Upward trend lines indicate an uptrend, while downward trend lines signal a downtrend. Drawing trend lines helps you visualize potential price movements and makes it easier to spot breakout opportunities. Now, how do you combine all this information for smarter trading decisions? The secret is in confluence, using multiple indicators together to confirm your predictions. For example, if a stock is approaching a support level, trading above its 50-day moving average, and the RSI is in a neutral range, not overbought or oversold, it might be a strong buy signal. But if the stock is at resistance, the RSI is overbought, and volume is low, it could signal a price pullback. Finally, don't forget about chart patterns. These include formations like triangles, head and shoulders, and flags. Each pattern has its own implications. For instance, an ascending triangle typically signals an upward breakout, while a head and shoulders pattern indicates a potential reversal. Technical analysis isn't about predicting the market with 100% certainty. It's about managing risk and increasing your chances of success. By mastering the use of charts, trend lines, moving averages, and volume indicators, you can make smarter stock trading decisions and trade with more confidence. Want more insights on stock trading? Hit that subscribe button and start building your technical analysis skills today. The market is full of opportunities, and with the right tools, you can stay ahead of the game.